I'm Chris Nebenzahl, joined by Jay Denton. Jay, what's happening in the market this week?
Chris, we're going to talk about a few things in this episode. Last week, we discussed a conference I was going to go to in Austin. I'll give a little bit of a recap on that because I got to hear some really boots on the ground, what's really happening from job growth perspective when you talk to recruiters who are trying to actually fill all these roles. So a few highlights on that. You just dug into some state level employment trends and unemployment trends. I'm ready to hear what you have to say about that. And then we just came out with another new forecast, I think yesterday. And so we're deep in the analysis to see what changed. What are some of the things that stick out to us? So that's what we plan to get into today.
Sounds good. Let's get into it.
All right. Well, yeah, covered a little bit last week at this conference I was going to go to in Austin. It's called the ERE Recruiting Conference, and there were a couple hundred, I think, recruiters, talent acquisition leaders in the audience participating in roundtables. There were a bunch more that were attending the online sessions, and I was really fortunate to get to talk to people that are recruiting talent for some of the biggest organizations in the country, maybe in the world. Also, folks that are just at smaller firms that are trying to fill childcare roles and things like that. So, I had conversations with, brand names you would know from big automotive, software, HR, of course, some of the systems you'd be familiar with, personal finance, cruise lines, manufacturing. So got to talk to a lot of people, and it was just such a great one. It's a terrific conference where people are real. The conversations about what it's like to attract, hire, and retain talent, very, very real conversations. It's one of the favorite conferences I go to, even though it's kind of out of the industry, but it's something that's really important to all of us. So a few anecdotes, that I picked up from the conference. One, focus first on multifamily. It was in Austin, in downtown Austin. Obviously, I was surrounded by a lot of construction. Just looking around, we've talked about as we've traveled around the country, certain places we go, like in Indianapolis, where you're downtown, not a lot of cranes in the air. That's not the case with Austin, on a per capita basis. Goodness, the amount of construction there. But great city. I always enjoy visiting it. One of the guys that I talked to in attendance, it's fun when you're at these receptions and you talk a little bit about what you're doing and focused on these days. And I mentioned multifamily. Well, this individual has a condo rental in downtown Austin, a 3-bedroom, 3-bath, was really hoping this year he would be able to raise rents to offset a little bit of the cost that he's had to endure from taxes going up and so on. I let him know this was not the year for that, given that Austin of major markets, if we look at rents, more on the institutional multifamily side, but looking at rents in Austin down the most year over year of practically any major metro, that we follow. So had some of those kind of conversations. A lot of people actually that were running like software companies coming up to me because they're very interested in real estate as well. So kind of unexpected, but fun. If I think about the sentiment of the conference in general, one of the takeaways that, and I'm sure we'll get into this, I know we will a little bit when we talk about state employment trends. We got to talking about tech and tech hires over the last couple of years, and hearing from people that were directly competing with talent from those organizations that might have overhired. That some of the comments I got back were that they knew of engineers that had barely full workloads. One case was talking about 15-hour work weeks and for some stretches, not necessarily the whole time, but just the feeling that this huge run up in tech hiring was a real thing in terms of overhiring, and we're just on the other side of it now. So likely going to see some balance, but I stayed right next to the Indeed headquarters, the tower there, and kind of heavy heart looking at that building, knowing people being impacted. I think they had announced, we mentioned in the last podcast, cutting about 1,000 jobs overall for Indeed. And so saw it certainly in Austin from the crowd, hearing about, the struggles still with tech and, the rebound there. It's been in a little bit of a recession, but that was part of it. I say broadly speaking, the more, softer job market compared to what it's been, and how for people in recruiting, they were figuring out how do you redeploy really talented people that were recruiters when you're not recruiting a whole lot. And so they looked at other parts of the organization, sometimes in sales or marketing, some others that would use those skill sets. So, again, really interesting to hear more of what I would call boots on the ground and what they were experiencing there, because to me, it just gave a deeper level of understanding of demand for types of jobs that then relates for the types of jobs, ultimately income levels associated with those jobs, and then income levels related back to what type of multifamily demand might that spur. So, great conference. Last note that I'll tell the crowd: if you're in Austin, I spent one of the nights we spent in East Austin. Really cool neighborhood if you've never been there. I know there's been some multifamily targeted over there in terms of construction as well. I understand why after spending a bit more time than I had. Great restaurant scene. If you go to a place called Suerte. That's Suerte. Terrific Mexican food. One of those, like, you finish it and you're like, I can't wait to tell all my family and friends about it. So great week in Austin. More, like I said, really granular research on what's happening with the job market. But as I mentioned in the outset, Chris, have been digging into more of the state employment, unemployment trends, and would love to hear some of the comparisons and contrasting you've seen in terms of performance so far this year.
Yeah, absolutely. And before I jump into the data, I was recently in Austin as well. And one of the things that struck me was how much development is going on in the suburbs around the new Tesla plant. Well, one of the other things that struck me was just how giant that Tesla plant is. You can see it right from the tollway, right from US 130, and it's massive. But also, it seems like there's one or two communities, pretty much every exit going for 10, 15 miles on that tollway. So you mentioned the employment market in Austin. I know Tesla made some headlines saying they were going to reduce staff at the Gigafactory in Austin. What's that going to do to the occupancy of some of those newer Class A developments out in the suburbs, out towards the east? So, Austin's a market that we have our eyes on for sure. Big boom market in 2021. It's certainly cooled down recently. There's still a lot of supply and certainly some, I'd say, crosswinds on the economic front in Austin. So, great stuff on Austin. So you mentioned the state level employment. State level employment is lagged from the national data that we talked about in previous podcasts. But one of the big takeaways for me at the metropolitan level and the state level, New York is still one of the, if not the fastest growing metropolitan areas. So certainly the headlines for the past couple of years has been New York, the outmigration, the job loss. But New York is still going strong. The metropolitan area alone, that includes northern New Jersey, parts of Connecticut, they added more than 120,000 jobs over the past 12 months. Many of those jobs will be renters. So when we look at our construction pipeline data and see that more than 100,000 units are under construction in New York, even though there's an overall trend about migration, even though there's an overall shrinking of the New York population, that metro area is still very, very strong. It's still the biggest market in the country for a reason. So New York is certainly strong, and you're starting to see that in our rent data. New York is seeing annual rent growth, annual revenue growth, still one of the highest occupied markets in the country. Now, I juxtapose that against California. California and Nevada as well at the state level. Certainly California is one of the biggest economies in the country, one of the biggest economies in the world. But we've seen continued softening in the California markets. California had the highest unemployment rate of any state in the country. Now, it's not huge. It's just over 5%. But given where we've been from a national unemployment rate well below 4% in recent years, the fact that California has the highest unemployment rate is challenging. And we're seeing that play out from a demand perspective for multifamily. Nevada has a high unemployment rate as well. So really, it's a dichotomy between the Northeast, where we're seeing steady demand, the Southeast and into Texas. I'll talk about Texas in just a minute, where we're seeing very strong demand. But California, the employment market is still, I would say, on shaky footing. Jay, I know you drilled a little bit deeper into the tech jobs, specifically in California. What are you seeing there?
There was a LinkedIn post. I don't live on LinkedIn quite as much over the last few months because I've been so busy and traveling and so on. So thankfully I have people who send me like stuff you should pay attention to. And there was this guy who posted where he really dug into to the tech industry. So there are a lot of tech jobs. Tech jobs can be in every industry. So like manufacturing can have tech jobs. But this post focused on tech industry. So like the big name companies you would relate to tech, and looked at, often what gets covered, because we don't have time to do everything, none of us do. Often what gets covered from an industry perspective is the highest level of business and professional, or construction. You can get much more granular stats on types of businesses if you dig into the BLS data. So, what this gentleman did, he took some of the subsectors and industry groups, such as software publishers, computer system design, computing infrastructure, web search portals, so like your Googles and so on that would fit into that, streaming services and social networks. You can get that granular information, especially at the state level, because you have a broader employment base. It might be a little bit easier to get it there. So he took just those sub industries and looked at how many people were employed in those specific industries now versus right before the pandemic hit. California, and look, the BLS, it's been challenging with remote work and so on to get the most precise read, but I think the theme I'm about to talk about holds. California, if you look at those specific groups, they only have I think it was like 1,700 more jobs, like 1,700 more jobs today in those industries than right before the pandemic. Now, that number swelled during 2021, 22, and then in 23, you started to see, the cutbacks with layoffs and so on. But California's 1,700 jobs, the rest of the country up more than 500,000. And so, as that hiring occurred and businesses grew and populations grew in other parts of the country, I just found it really interesting when you start to break the jobs down into that, that sort of way. It's obviously very important, as we've discussed, types of jobs. I just said it a second ago. Types of jobs relate to types of income, relates to different segments of demand within multifamily. And obviously those industries pay above and well above market average, which means above average incomes, which means that's the type of job growth you really want to fill in the new supply. It's been struggling, as we all know, recently. Hopefully more of those jobs come about, but I love it when people put out really insightful information like that, really digging in to help understand, beyond the headlines that you see.
Yeah, and that's a great point. Again, looking at the state level data, in April alone, Florida added 45,000 jobs. Texas added 42,000 jobs. Now that's at the state level. There are a number of MSAs within those states, and that's total job creation, not just the tech jobs. But when you look at the absolute job creation, almost 100,000 jobs added in 1 month in those two states alone, you can see where the demand is flowing, and that corresponds almost exactly with what we're seeing in our data in terms of traffic. Miami just passed Dallas for the top spot in total traffic per week per property. And so there's no shock there that markets in Florida, markets in Texas are seeing the general increase in demand in leasing, in traffic on the apartment side. Again, you look at some of these numbers you mentioned, absorbing the new supply. Now, not all of these jobs will be high-paying jobs at the levels that you mentioned, but the absolute job growth is just so strong, and to see it kind of juxtaposed against a market like California, against a market, tech industry in California that had dominated for so long, and now we're seeing that move to other places. Missouri is an interesting example as well. Missouri had the third most job growth in the month of April. More than 16,000 jobs in April alone added in Missouri. And that was an interesting one for me. I've heard a lot about St. Louis. Their economy is deteriorating. Their office market is in really tough shape. But Kansas City is actually a market that I have my eye on. There was just actually a Rent Cafe report that was released today that said Overland Park, Kansas, one of the suburbs of Kansas City, is really strong, among the highest demand for apartment markets in the nation. And you're seeing that on the Missouri side of Kansas City as well. A really strong market. One of those perhaps emerging tech hubs. It's nowhere near San Francisco. It's nowhere near even in Austin yet. But we are starting to see a lot of tech jobs going into Kansas City. Google has a large presence in Kansas City. So yeah, the migration of people, the migration of jobs, that's a huge driver of apartment demand. And that's something that we're going to keep our eye on for a long time.
Yeah, I'd
So
say
switching gears.
real fast.
Go ahead.
What's been fun for me, I've fortunately or unfortunately been tracking the multifamily market a little longer than you have, Chris. Not much. You've got plenty of expertise, but given age, I've just been in it a little bit longer. It's fun just observing how a market like Kansas City or like a Salt Lake just they just start moving a little bit closer to the middle than the forefront of some of the markets that are part of the discussion. Where if I rolled back to the beginning of the previous cycle, say like right after especially right after the Great Recession, where you had the three markets I would have pointed out last cycle that just really moved up um, the discussion points were Austin, Denver, and Nashville. And now you see like and these two, Salt Lake and Kansas City, were kind of part of that, but a little further behind. And then now you just start to see them more. Where when I went back and I was first, tracking the apartment industry in the early 2000s, no one was talking about Salt Lake or Kansas City, and they were only a little bit talking about the other three markets that I mentioned. So it'll be cool to see in 10 more years, are we talking about St. Louis instead of Kansas City and some of the others, or some of the ones that are out there?
Absolutely, absolutely, and our industry is certainly cyclical. I would imagine, the return of some of the markets that perhaps are underperforming. You and I on this program have talked about kind of the resurgence in the Midwest right now. Now, I don't see it quite yet in St. Louis, but a lot of these Midwestern markets are leading the pack these days.
Yeah, I
So,
think
speaking of markets leading the pack,
Columbus is probably the obvious one that we hear more often within that region.
yeah, absolutely. Columbus is at the top of our rankings. You mentioned we've got new forecasts that are just being released, Jay. What have you seen in the new rent occupancy and revenue forecasts? What were some of the highlights?
In some ways, the good news is not a lot changed. Maybe that's not great news because the numbers aren't what I would call fantastic by any means. But something I learned, especially a lot more when I was directly in the industry working with an owner operator, is if your forecast changes wildly from like one to the next, then that's kind of a challenge. It means that you have a lot of unpredictability happen. So I think the good news, especially overall U.S. level, from the forecast, just from a month or two ago, not huge changes. So occupancy at a U.S. level, we're forecasting at 93.9%. It's basically where it sits right now based on the Rayout report. I know that you released earlier in the week. I think it was 93.95. So again, getting a hair closer to 94. But essentially, we've been forecasting right within that range, 10 or 20 basis points within it. So it's still there. I think that I mentioned fortunate from a predictability. When you know what's going to happen or you feel confident, that's good. You can do better decision making. The unfortunate thing is that occupancy rate is a bit lower than what you'd hope for. And when we look at the trends, we're not seeing the typical improvement in occupancy as the leasing season is now. We're almost 2 months into the prime part of leasing season. We're just not seeing that surge that we normally see. So that's the unfortunate part, that it's staying a bit more steady. Again, things could always be worse, but that's occupancy. On the rent growth side, again, it's down a hair or two. So previously we were just under, rents declining 1% or 0.9% for the full year average at the national level. It's ticked down to minus 1.1% is our estimate for this year. I would not be surprised if it declines a little bit more. Essentially what's happening is we get more actuals in, then if the actuals are coming in and they're a little bit more negative than what we had forecasted, you're going to see that rate tick down as we move throughout the year. Right now, we're at negative 1.5% for rents, net effective rent growth for new leases, and so we're essentially the projection saying it'll get a little bit better between now and the end of the year, an average negative 1.1. But so again, good from a predictability standpoint, not as great from a what we would hope for the market. So that's at the national level. Chris, have you dug into any of the metros? Anything standing out to you there?
Yeah, we've covered some of the smaller Western markets a lot in the Rayot recently. Reno has had a really good start to the year, and our forecasts are reflecting that. We revised our forecast for Reno up a little bit. Albuquerque as well. Midland, Texas, seems to keep flying. That's a market closely tied to the oil market, and as oil as U.S. production of oil continues to grow and the price of oil stays high, that Midland market's going to do very, very well from a rent perspective. And then again, the markets that we've revised down seem to be those southeastern markets struggling with new supply. So it looks like the absorption period is getting extended a little bit. Again, we've talked a lot about Austin today. Places like Huntsville, Charlotte, those forecasts have been revised down a little bit, more reflective of what we're seeing with just the vast supply that's being delivered and the time that it's taking to absorb those units. So again, not major changes as you mentioned, and that's good given that our industry is a rather slow moving industry. But yeah, some of the smaller markets out west improving, some of those markets in the southeast taking a little bit longer to absorb than we had expected.
Yeah, I think just giving the audience, we've touched on a few of these, but just focusing on the rent growth side because occupancy has been a bit more stable. Rent is where you've seen it move around more. On new leases, net effective rent growth, on the more pessimistic side, so full year averages somewhere between let's say -2% and -4%. You've got Salt Lake, Raleigh, Orlando, Phoenix, Nashville, Charlotte, Dallas, San Antonio, Atlanta, some of those. Austin's a bit below that, as is Huntsville. On the more positive side, we're still seeing Albuquerque, as you just mentioned, Chicago, Seattle, DC. They're in that right around 2% or maybe a little bit better. So I think, on some of the materials that we're working on, it seems like there are bright spots. You can't deny that. I mean, we're at a point which is great when you can see markets get on the other side of it. So there are bright spots, but we haven't exactly seen improvement across the scale for all markets. I think that's probably going to be a bit more of a 2025 story, or maybe later in some cases.
Yeah, I agree, and a lot of that hinges on the supply. Markets that you mentioned that are outperforming, Boston, Chicago, even Columbus that we mentioned earlier, their supply waves are pretty much done, or the bulk of it is passed, and I think those markets will drive the acceleration. Some of the other markets will take a year or so to recover. So Jay, I know we've got a long weekend coming up. We'll wrap up today's program. What do you got going for Memorial Day? Any fun plans?
Of course. First, thanks to all the current and former serving members of our military, especially those that have given their lives for our country. That's what this weekend's about. So I wanted to say thank you for that. In terms of on a little bit lighter note, from friends and family, barbecues, as you can imagine. So the one group of guys, they are really into expensive barbecue. And so they've gotten some sort of fancy brisket that we're going to make. I'm on tap for the jalapeno poppers. So I'll be trying out maybe a couple new recipes this weekend. We'll see how that goes, but looking forward to it. What about you?
Yeah, that sounds fun. As a recent visitor to Texas, I love the brisket down there. So you'll have some good meals. I'm heading back east. I'm going to spend the long weekend with my family and have a chance to head back to where I grew up and hopefully catch up with some clients early next week as well. So looking forward to an extra day of the weekend, some early summer in the Northeast, and should be a lot of fun.
Well, enjoy it.
Thanks to everyone for joining us today. This has been the Radix Review, Multifamily Trends Explained, and stop by again next week for more in-depth information on the multifamily industry.